Global energy markets are in turmoil as the US-Israel war with Iran, now in its third week, continues to hammer crude oil prices higher, driven by attacks on key infrastructure, near total closure of the Strait of Hormuz, and fears of prolonged supply disruptions from the Persian Gulf. Brent crude, the international benchmark, has more than doubled from pre-war levels around $70 to $72 per barrel at the end of February to well over $110 today, marking one of the sharpest rallies in modern history. The surge reflects escalating risks to roughly 20% of global oil flows through the strait, combined with direct hits on production sites like Iran's South Pars field and Qatar's Ras Laffan LNG hub. Let's now take a look at a day-by-day oil price comparison. Alright, so we now know that after this war, prices of oil have jumped significantly. Now let's take a look at the prices of this precious commodity since the war has begun. And now pre-war levels, the oil was trading at $70 per barrel. On February the 28th, the price of oil was $72 per barrel. Come the first week of March, that is March 1st, we can see that there is a $9 increase in price in 1 barrel of oil, with now 1 barrel costing $79 on March 1st, 2026. We can now see that on March 2nd, the price of 1 barrel of Brent crude is at $82 per barrel. Then again, we can see that on March 3rd, the price of 1 barrel of oil is costing $81. Now coming to March 9th and 10th, we can see that the price of oil is at $90 per barrel. Coming to March 12th, we can now see that the price of 1 barrel of oil is now trading at $102 per barrel, which is a roughly $30 increase in price in just 6 days. We can now see that the price of oil on March 12th, 2026 was $102 per barrel, but the price on March 13th, 2026 was $103 per barrel. Coming to March 18th, 2026, we can see that 1 barrel of oil now costs $107 per barrel. Now looking at the price today, the price of 1 barrel stands at $111 per barrel. This is the first time that oil has crossed $100 in nearly 4 years. So as we can see from pre-war levels to the current period, we can see a jump of almost to $40 per barrel. So that's a huge price increase in the cost of this commodity. This again are the Brent crude prices. Now the only difference between Brent crude as well as another key traded commodity is the WTI, which is the West Texas Intermediate, which has also shot up after this war had begun. With that, let me go across to Mr. Anil Jain, who is an economist who is joining us on the broadcast. Thank you so much, sir, for being with us here this morning. My first question to you is, sir, that we are of course seeing that oil prices since the war have begun has shown a dramatic increase. According to you, what are some of the potential long-term implications for the global oil prices as well as for global trade ever since this war has begun?
Well, I will first say that let's understand and accept that this is not a short-term war. It's going to go long and maybe few years. And it has been a history of American wars where the America has fought even the small war for at least 1 year. Starting from Vietnam War, they fought it for 20 years from 1955 to 75, then Afghanistan War from 2001 to 2021, again 20 years. Iraq War, they fought for 8 years, 2003 to 11. And then we all know World War I and II, they all went for 5 years. A small war in Kuwait, America had to fight for 1 year. And we are seeing this Ukraine war, which is going on for last 5 years without results. So let's accept that whatever disruptions are taking place, whether economic or otherwise or political, they will have a very, very long-term impact. And on the macroeconomic side, definitely oil plays a very important role. So the oil prices will continuously go northwards. There is no way to stop it. You have already given information in last few minutes. You have shared that continuously since the start of this war, the prices are now almost touching $110, and which are, as just now Major General Sudhakar also said, that in times to come, in 3-4 months time, it can even touch to $150. So we all have to be prepared, and the world economy will change, a real challenge because of this oil prices. And let's hope that we are able to cope up with this. We have some ways to deal with this situation. But definitely, I do not see any resolution to this war. On the contrary, whatever has happened in the last 3-4 days, the yesterday's attack on Qatar oil facilities, and then the statement by the Saudi Arabian peer that Iran has crossed the red line. This is a straight signal that it's going to be a much more serious affair, and maybe many more participants are there in this entire scenario. So I think that it is going to have a great impact, and particularly India. Every increase of $1 gives us an additional bill of $2 billion. $1 increase in the crude price gives us a bill of $2 billion, and by now our bill has already overshooted by 50 to 60 billion dollars in the last 1 month time. So we are going to have this challenge, and we have to face this challenge whatever way. The government has to be prepared, and definitely the government is aware. Yesterday, Dubai minister is talking to our foreign minister Jai Shankar. I see definitely a big role for India now on the international stage, and let's hope some kind of solution is found, at least the temporary solution where some moratorium period is defined, given by the participants, so that the world can resolve this. This is what I feel. Over to you.
All right, so Mr. Anil Jain, thank you so much for being with us here on the broadcast and sharing your insights. We really do appreciate it. With that, I step into a very short break. Thank you so much for watching.